Do you want to make $10,000 today? Do you want to lose 20 pounds in the next month? Do you want to be well-liked and respected by all your peers? We can't help you with that. You've come to the wrong place. But if you do want to earn an hour of CPE credit for listening to this episode, right after you finish, head on over to the Earmark app, take a short 5-question quiz, and you earn 1 hour of CPE just for listening to us. Happy quizzing! Welcome to Unaccountable, the world's okayest accounting game show podcast for product news, updates, and education. I am your tax titan of a host, Tyler Otto, and I'm joined by the analysis anomaly, Jeremy Van Grohl, looking spry and chipper. End of year is not beating you up for this year, right?
Oh, they're like so many of those bruises just have healed over at this point, right? Like I would say those first 6 weeks, right? Like January, you got all the same things, but in February, it doesn't, like the first couple weeks doesn't get much better because you're rolling over everything for the new year and like all sorts of like, if you want to do improvements, now's the time to do it and get that in January. So you have a full year of new stuff. So it just seems to be a lot. I feel like we're coming out of it now. So we're taping on the 19th year of February. There's light. The tunnel is still long, but there's light.
So you're saying that crisp tan it looks like you have is actually just the bruising has evened out all over.
Right. Yes.
Okay.
It's not just specific to certain areas. Correct.
Oh, well, soon enough, my friend. But
Yeah.
It's been an interesting week in the news. Have you been paying attention to which payment platform is making some serious integration moves? Any guesses?
No. Bill.com. I have no idea on this one.
No. Melio are our AP payment platform friends who several months ago, a lot of people had a lot of outrage and anger at over their surprise change in pricing model and how they rolled it out and just kind of that whole thing didn't go well. They're making moves. First off, there's an article out here that Melio is legit partnering up with Amazon Business. Like if you go to business.amazon.com, this is on their page. They are now opening up the ability for you to do AP payments via invoice for Amazon payments through Melio, like a direct sync integration between Melio and Amazon, which already like any sort of partnership where Amazon is saying, hey, you can pay your stuff with us and other vendors through Melio, like that's huge for them to partner up with Jeff Bezos and his Death Star.
How are they doing this? Like, who is in charge of corporate connections for them that first they got in bed with Intuit and now Amazon? Like, I've said that to our team before, like, what would be the most amazing person or business or something if we got connected to them? You'd be like, wow, and just put it on a list, right? Like, just moonshots that would just move us in a crazy direction. I got to know who did this. This is crazy. But I'm also curious, and you might know this, how does this work? So like usually if you go into Amazon Business, you make a purchase, it's tied to a credit card, charges the credit card as soon as they fulfill the order, moves on. So now it's going to be like invoice processing?
So here's the interesting part, because I had the same question and I'm like, doesn't Amazon like already just take my payment every time in the business? And it's saying if you're a pay by invoice customer of Amazon, which I didn't even realize was a thing, you can import your Amazon business invoices and process them in a few payments in your Melio, even including card payments, streamline your batch. So apparently there's a lot of people on Amazon business accounts that are pay by invoice, and you'll be able to sync all those invoices directly into Melio from your Amazon business account, which part of me also thought like, wasn't this already doable with like QuickBooks where they had an Amazon business integration and automatically synced over your expenses, bills, and then you could have just synced up Melio to QuickBooks. Either way, this is huge. Like if Amazon is saying, hey, here's your preferred way to get paid, that's big for them.
That is. And a couple of things like the Intuit partnership, how long does it last and what's the fallout? Because I feel like that's always going to happen when you're the David tied to Goliath, right?
Who's the Goliath here? I'm kidding.
But then also like, just thinking again functionally, I'm trying to see where this adds value because first of all, your business must be much larger than both of ours and have decent credit standing, not bounce its bills to its wonderful podcast producer every time.
We love you, Ian.
But like, I'm just trying to first, why would you pay by invoice? I feel like you would lose the detail because like right now, if you get a client that gives you an invoice and like, oh, I need this separated by whatever, then you'd have to like take it and split it, and you add all this time in there. And I'm sure there's cooler AI tools that I don't use that you're going to tell me, no, you don't, Jeremy. Sometimes you do. Anyway, go. I can see it in your face.
No, it's totally fine. It brings up a great question. But I want to segue this because not to be outdone, guess which bill pay software is now partnering up with Gusto to offer bill pay, not just, payroll and paying contractors, but full bill pay integrated with QuickBooks directly inside of Gusto. Any guesses?
No. And I saw like my Gusto rep reached out to me and he's like, new things coming on. Let's talk. And I haven't got there yet.
Do you want to take a guess which payment provider?
Melio? I don't know. What we're talking?
Yeah, doubling down. Yeah, Melio gets this announcement with Amazon. And now on Gusto's website, they're now going to be offering straight up full bill pay like you would in Bill.com, like you would in Ramp or Brex or Forwardly. You're going to be able to pay your staff, pay your contractors, and now pay all AP bills through Melio directly in Gusto. You asked who over there is in charge of corporate sponsorships? They deserve a raise, my friend. When within the same month, Amazon and Gusto are saying, here's our preferred payment provider integrating into our system.
Do you feel like Gusto's getting out of their lane there a little, though?
Are they getting out of their lane? I would say yes, if they were building everything themselves and trying to dominate. But they're not. They're building integrations. And I think that's actually what Gusto has done well. Gusto touts that, hey, through us, you can get 401ks set up. But it's not actually through them. You pick Vestwell or Guideline or something else that integrates with Gusto. And it's the same thing, time tracking. Gusto says we have a basic one, but we integrate with everybody, whether you want to use Homebase or Spot On or Square or whatever. Like, they allow you to do integrations. I should double check that. I'm not sure they integrate with Square, but they integrate with a lot of stuff. And I think that's the brilliance is Gusto is not trying to build their own bill pay. They're saying, hey, here's someone that's already figured out. It also makes it easy for them, like QuickBooks did, where if it's an experience they don't like, they can boot them out the door because it's no longer their product. It's a partnership.
This is the one where did you get a 1099 from Gusto? Could you use them?
I should probably check. I got plenty of 1099s for all the referral bonuses I got. Thank you, Gusto, Relay, and everyone else.
Well, I got it. And then it was like 2 days later, an email came out and said, we apologize. You've received this 1099 as you are structured as an S Corp. Our partner firm of 360 whatever did this. And I'm like, I don't care. I know. But it was just like right away, it wasn't us. It was like our partner firm did this. So like keeping things at arm's length that you have a scapegoat.
I think it's with all things, right? Even our firms, right? We don't want to get out of our lane. But at the same point, I want to solve every problem for my clients. Yeah. So I say, yes, we can help with that. Here's the insurance firm I recommend. Yes, we can absolutely help with that. Here's the lawyers I like to work with for setting up entities. Gusto's saying, yes, we'll help you with that. We will make it so you can pay your bills in here through Melio. And they're very clear everywhere this service is provided by Melio. I mean, Melio's moving, man.
Yeah, I mean, that's cool for them, right? It was kind of like, I can see after that Intuit kick out that they were like, all right, temporary setback. We got these other ones coming up. It's going to be fantastic, and let's roll.
Yeah. So kudos to them. What else is in the news?
One more in the news. Did you see trailer for The Accountant 2 dropped this week?
I saw a little bit of it.
Back. Yeah?
How does it look? Because I saw the intro. I'm like, I don't have the brain space at the moment to dedicate to this, and I want to come back to it.
Oh, I watched it. It looks pretty good. So, like, no Anna Kendrick, but I feel like she was a little weird in that role anyway. Like, I don't know. I just didn't totally buy her as this, like, junior accountant character and that. But, yeah, it seems interesting. It seemed like it had a good premise. It's got the main actress that was working at the U.S. Treasury Department and the really famous one who's got initials, the bald guy. God, I'm so
Your analysis is amazing here. It has the guy in the thing and the woman that did the
thing
role.
And doing the other. Yeah. Was it J.K.
Simmons?
J.K. Simmons. Thank you. He's in there, but I think, spoiler alert, if you didn't watch the trailer, he gets murdered. But then he writes on his arm, find the accountant. So it looks pretty cool. I was just putting it out there, like a little coolness getting into this accounting world. A new movie coming out. I think it's April 25th.
I really hope at some point this character has some sort of telltale sign that we have Halloween costumes, that it's very clear we are Ben Affleck, the accountant, and not something else. But right now, there's not anything like one thing. Harry Potter, you just put a lightning bolt on your forehead and you've dressed up. We need something Ben Affleck. Make it so that we can dress up as the cool accountant.
Yeah, and we're already awkward like he is in there, so that we've got down. Also, I just processing the drop date. Notice that it's later April, so I make sure all the accountants can get through tax season, take a break off to recuperate, get their tickets for the drop on April 25th or whatever it is.
Thank you, Ben Affleck.
Yeah.
Jeremy, next segment in the show, and I mean, for those that are actively watching us, like they're the sadistic type that like to actually watch our podcast episodes.
I was gonna say why first. Why are you watching us? But okay, let's go with that.
It's those people that want to feel better about themselves, right? They want to see, well, at least I'm not those guys. Yeah. So for those paying attention, we completely just switched outfits and daytime and lighting because we originally saved this spot. We were supposed to have a guest today, and something came up about 15 minutes before we lost our guest. We thought we would end up having them later in the day, and that never happened. So we're recording on a different day. Sorry, everyone, if this feels a little disjointed, but you know what? Now you get exactly what you came here for, which is me and Jeremy. So you're welcome.
Yeah, and as business owners, you need to learn how to pivot, right? So as mildly successful business owners, we're going to apply that to Unaccountable as well. You got to pivot. So here we are.
So Jeremy, actually, this is perfect though, because there was an article that Karbon, the practice management software, came out with this week about the state of AI in the accounting industry. The report for 2025, interviewing tons of firm owners from 2024. And they had some really neat insights that actually I would love to break down with you. For a game today, I'm calling Everything's Gonna Be A.I.ght.
A.I.ght. I like that. Maybe more importantly, can we talk about the computer or AI strike zone in baseball? Is that more important? Probably not for this audience, but cool. Anyway, go on.
I mean, that's right up there with the line in tennis, right? And all of that, and the soccer ball, the goal line. Yeah.
But the NFL has to use a chain that's rusted from 1943 to map out 10 yards. Yeah, awesome.
Yeah, that's the charm of the game. Jeremy, I'm going to run you through 5 very subjective questions that I would be impressed if you even got more than half right. But I mean, that's why people are here, to see you fail. So let's run through it, see how you do, and discuss.
All right, let's do it.
Well done. All right, Jeremy. So based on every question I'm getting at you here is based on this survey, and I want to debrief. But first off, this article noted that with the advent of AI, in 2024, they estimated this, that by the year 2030, the financial services industry will save how much money in efficiencies from AI? Is it 100 million, 1 billion, 100 billion, or $1 trillion?
Ooh, I'm going to go $100 billion.
They're going for the big boy. They're saying $1 trillion in savings and efficiencies from AI up to 2030. I mean, it's insane to think that they think it's going to transform the industry that much. But honestly, I don't know who's to argue with that number. Maybe you and I should come up with our own number, because who's going to argue it and prove us wrong? But there was one comment I absolutely loved in here, and then I want to get your thoughts on, this AI and the efficiencies it brings. But in the article, one partner of a firm said, AI in the short term is a nice additional tool to our toolbox as accountants. I believe over the next 1 to 3 years, AI will be built into every tool we use. And in the mid to long term, it's anyone's guess whether AI causes more issues than it solves. How do you feel about that?
I mean, like, the fact that it's going to be there, right, and touch everything, I think is unavoidable at this point, right? If you want to be efficient as a practice, whether it's financial services or anything else, you need to use it. We were just on a call with the team today talking about like performance reviews and how much weight we put on like the self-review people do. And one of the people on my team was like, oh, now that I've chat GPT, these are easy, right? Just to kind of use that, right, for everything. So yeah, but it also inherently causes problems, like they say. So there's things that we set up, there's rules even at the lowest level of AI, and there's like things break, right? And that's the part to me that's scary, is that you don't have an intelligent person validating things on the back end. But can you AI that too? Like take Keeper for example, it can say, were there duplicate transactions? Do you have this in the wrong account because it's not following history, right? So like the checks and balances are there, but I'm not convinced yet that there won't have to be a human brain involved that's not just the AI engineer.
That's exactly right. One of the, I'm jumping ahead to near the end of the article, but what you said just triggered something for me, which is this manager said AI is similar to a very complex Excel formula. It can accomplish great things if set up well, but if the input data is bad, the results will be bad. And Jeremy, you and I have worked with enough staff, built enough models, handed them off to people where it's like, this is perfect. And yet somehow someone on your team put in, the inventory balance like backwards, and they posted negative cost of sales, and they're like, the tool did exactly as it was supposed to because you built a very impressive model, but no one ever thought to look and say, inventory is now $12,000 negative, and like maybe we should do something about that. And they send you those financials for review, like ready to go out. You still need a brain to make sure that even if it's a very robust system, does this pass the sniff test of logic?
Oh yeah, I agree with that too. And I don't think anybody doesn't fall prey to that, right? Because even me, and I consider myself doing high work, if I'm doing the transactional stuff,
high work or high level work?
High level work.
Okay, just didn't know if that was your. Never mind.
Colorado, man, come on. But like when you are so much in the weeds, you don't see the 10,000 level very well. So that's why I feel like even if it's an AI tool or human brain, that quality check where you can see it, right? And it's super obvious when you look at a trend, like that's not right. Like something's wrong there. But when you're doing all of the bits and pieces, it's hard to back up and just like take an overview and test it, right? So yeah. I think that's spot on.
No, it's just like any other tool. You're trusting the outputs to have the double checks built in. Basically, you're removing your own scope, your own review, your own sniff test of it, and trusting the engineer that built it to have put in a mechanism to catch that. I think about one client where we're like, hey, let's do this method. Let's start paying your kids, doing whatever. Coming to find out, their kid gets disability benefits for certain things, and earned income would have destroyed their disability benefits. And it's like, oh, well, if I plug that into an AI model, like it would have just done havoc on their family situation. Like, no, you can't just trust it. So I'm right there with you of like, I think an AI model would absolutely bring that up as an opportunity and say, hey, we should look at paying your kids through the business as an option, but it shouldn't just be, all right, here's the recipe, go cook. Question 2, Jeremy. The article lists that accounting professionals are currently leveraging AI the most in these 3 key areas. Which of these 3 has the highest usage by accountants? So they are using it for all 3 of these, but one of them far and away the most. Okay. Are they using it for communication purposes, using AI to compose email and fine-tune their writing tone? B, task automation, automate task workflows to free up time on more complex tasks. Or C, they're using it for meeting transcripts, transcribing meetings and automatically generating action items and meeting summaries.
Man, that's hard. I see all of those. Everyone, I was like, it was that one. No, it's that one. No, it's that one. I'm going to go with the task automation. B.
Again, very subjective. So, 41% of firms and 40% of firms are using it for task automation and meeting transcripts. But overwhelming 63% say they're using it for communication, drafting emails, drafting communication to clients, and fine-tuning their writing tone, which to me, that was when you are ready to swear out the roof at your client for being the ultimate just deplorable of humanity. Say, AI, can you please rewrite this in a professional tone?
Right. Yeah, and that makes sense, right? The piece that I was thinking, we get stuck in a world where we're cloud-based and a little bit, we're not on the cutting edge, but a little bit more on the cutting edge. And I feel like that routine task automation is high on our lists for people in a similar place to get that in place, because I feel like it's got a higher level of return because how much of our normal work is very routine tasks. But yeah, I mean, that's probably what I use it for the most. Secondary is like communication, right? Yeah.
Yeah.
So I buy
But
it.
I do think the task automation is where all the savings come from going forward once we fine tune it and get it there enough. Like the meeting transcripts is awesome. Don't get me wrong. I
Right.
love my little note taker and giving me summary and whatnot. That's only going to get better. And the communication, like whatever, like the task automation is really what I think is going to save us money in the long run. It's just like, when bank feeds came along, right? And we no longer had to have an employee wait for the statements to come in the mail and type in all the transactions,
Yeah.
but instead they just auto showed up. Like that's the sort of stuff that it's going to be just making better and better. So,
Yeah.
but I imagine you use AI for all three of these as well, right? Communication, task, and meeting transcripts.
Yeah, and I probably need to use it more. If I had to think about one of these that I need to do is the communication side, right? Like I feel like I really need to well word something and I sit there and hammer it out and then I'm like, you idiot, you probably should have just let AI do 90% of this. But yeah, but definitely use them all.
My assistant has an AI bot. She's trained to talk like me, and some of the stuff it puts out, I am like, that is some of the funniest stuff I've seen, and I wish I could have come up with that. And it's just like, and I think like the first time she went to train it, she said, rewrite this paragraph on this tax stuff. But imagine you're a 37-year-old male, white male that uses the words friggin' and awesome a lot. And just that alone, like, got it halfway there.
Oh, I love it.
All right. Question 3. While beginner level users of AI claim to save an average of 46 minutes a day in productivity, advanced level users claim they save nearly how many minutes a day? 60, 80, or 100?
I think advanced users go to the top. I'm going to go 100.
As I said, this quiz is so subjective, man.
Yeah.
There is no way. Like, you have no basis.
Yeah.
And this is all poll data anyway. So,
Yeah.
Jeremy, if you get shut out, we're going to give you some grace.
All right.
They say 80 minutes a day advanced users are saving. And actually, this is where I had that little quote earlier on AI is similar to a very complex Excel model. Because you're right. Like, you're just taking tools and tasks that you do automatically all the time that you want to get to a rinse and repeat format. And I am so sorry because I know I've said this 95 times. I don't remember if I've said it on this podcast or in the relay webinar I did this week or whatnot. But like, again, it's like the Excel spreadsheet got rid of the people that were doing manual spreadsheets in the firm and they all lost their jobs. We're going to have a lot of our entry-level staff lose their jobs, but it's not like accountants are going to go away. It's not like there's still going to be work to then manage the tool.
Yeah, I agree. And that's a hard conversation to have with, like, there are certain team members we have that are just transactional people, right? And that's what they love doing. And they're like, hey, I'd love to do more. And I'd be like, I could probably give you more now, but I'm just putting it out there that eventually most of the things you're doing, I'm going to be able to automatically happen. So just keep that in mind for future conversations.
I've told my staff, in the next 1 to 3 years, our entry-level job as it sits now is going to be gone. Like, It's just like, and if I'm wrong, great for you guys. But if I had to guess, I would not expect our entry-level role to be here. You need to learn the next level up. You need to be ready. And lucky you guys, you're here 1 to 3 years out. You have time to learn that role and be ready for the next one. So awesome. Like, this is not me saying you're about to get fired. This is me saying, hey, you've been given enough notice to be able to stay with us and go into that next spot. Awesome.
Till that conversation you have to have. You know how I had that conversation a couple years ago and you're kind of in the same place? Reckoning day.
Yeah. Question 4. According to the respondents of this survey, which of the core functions of an accounting firm do they believe will be the most affected by AI? Is it accounting, bookkeeping, tax, or wealth advisory?
Can't be wealth. I can't go 0 for 4 here. Bookkeeping, please, for the love of God.
Well done. Yes. So in order from what they believe will be the most affected to the bottom, 57% say bookkeeping will be effective. 29% say accounting, 27% say tax, 4% say wealth advisory. And so wealth advisory, they don't think is really going to be affected at all. But, the bookkeeping side, like, I see this. I think it'll be affected, but I don't think it will be entirely replaced because, again, you need that knowledge to see expenses come across for a whole bunch of food and realize, is that a promotional event, an employee appreciation, or just like an office meal? Like, how are we going to categorize? How are we going to go through this? Is that a fixed asset or is that maintenance? Well, what could we legally get away with? Like, those sort of questions, they're not going to go away. But as someone who has bookkeeping still in the name of their firm, how do you feel?
I feel okay with that, and I wasn't fancy and rebranded it, but I like we do so much more, right? Even if that's our name, it's not like we
Yep.
just do that. And again, I am 100% convinced we are in the people business, and that's
Yep.
why like I have my staff and tell them like when we interact with people, it's our and it's all of those inclusive pronouns that we're using because we want to be part of their mission. So yeah,
Yep.
I think that's right though on the bookkeeping side. So I'm not worried about it. The other ones I had comments on like wealth management. Again, I think that wealth management, I think that's a people thing, right? Like you need to
Yep.
know people's goals and what they want to aspire to do to life in that one. And then you'd think tax would be more, but I feel like tax is just going to keep changing so much that you get a new administration. They're going to, hey, we're going to do this now and we're going to do this now. And guess what? We're making this implementing on April 1st and it's going to change by your 15th deadline. It's going to be harder to model that out longer term.
Well, and especially in like AI doesn't take into consideration what are your hopes and dreams. Are you wanting to retire in 3 years and then buy a bed and breakfast in the outskirts of Houston? And like, okay, what do we need to make that happen? Are you wanting to gift stuff to your kids, create a legacy fund? And like, there's just not enough algorithms to go through and just talk through those scenarios and factor in what everyone wants to do in life. So no, like, I think tax preparation is going to get just more and more automated. There is going to be that day where you just upload all the W-2s, K-9s, everything else, and it just spits it out and you're done. Like, there's no reason the system can't do that. But the advisory side, no, it's not going anywhere. And I don't know about you, Jeremy, but I wouldn't go to a bot and say, hey, you can do my tax planning, and then just trust what it spits out. Be like, has anyone made sure this is legit? Like, it's saying I could get 20 grand back, but I'm not. And it says I'm liable if it's wrong. No. Because you know the developers of the AI aren't going to say, hey, we're liable if it's wrong.
Yeah, that fine print is going to be super long saying, we are not liable for any blah, 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 blah.
Last question, Jeremy, and you've avoided the shutout, so you can just phone this one in. While 85% of respondents say they're intrigued or excited by AI, only what percent are actively investing in AI training for their teams? So 85% are excited or intrigued. What percent is actively investing in training for their teams? 10, 22, 37, 50. Which percentage?
22. I kind of want to say 10. 10?
37. You would have been wrong either way.
Oh, okay.
Just over a third, are saying that they're investing in training. And, part of me is like, well, that's a shame. And then part of me is like, but am I doing that? Like, I mean, I'm showing my staff cool stuff, but if it comes to tax or bookkeeping stuff, I know enough about bookkeeping and tax to also know what I want them to learn. I know what I want to curate for them as a training. AI is still such the Wild West. Like, how do you actually decide what training to even go for versus beyond just the YouTubers that are out there that are just going for clicks?
Yeah, and I know I wouldn't put myself in that category, right? Like the same thing. Like we try to adopt new tools, new processes, move the needle that way, but there's no direct like, hey, this is our AI training initiative right now. And I feel like if I got that for my team, I'd get a whole bunch of groans and be like, no. So yeah, I'm surprised it's that high, honestly. Did they say business? Like what's the poll here? So now we got to talk about the subjectivity. So this is Karbon doing the survey. Is it of Karbon users or is it of businesses? Do they say that?
Jeremy, to quote, because I know people love just us reading from an instruction manual live on a podcast.
Yeah.
But we'll do it in the voice of Morgan Freeman. No, I shouldn't even have tried that. I can't even. Can I do like, is there any good voice I could do? This data in the report is based on a unique survey conducted by Karbon in November 24. Respondents included 539 individuals from 6 continents, with the majority from the United States. They talk about firm sizes, whether they're 1 to 3 staff, 4 to 10, 11 to 20, 21 to 50, 51 to 200, 200 plus. The locations, whether they were individual operators, they were operators at a company, a manager, a partner, or other. But this is all people Karbon had access to, which also makes me believe they didn't say they're all Karbon users, but I would guess that's how Karbon got out to them. And if you're using Karbon, you're already using one of the more technologically advanced tools out there. They were one of the first ones to integrate an AI assistant directly into their platform to automatically help curate emails back when like ChatGPT was still like limited to a number of users. So, yes, take this with a grain of salt based on their data set.
Exactly what I was going to say is somehow they got on Karbon's list, which means they had either intentionally made an effort to look at Karbon or have done enough things that they got into Karbon's web of things to get added to their list and get this communication. So yeah, I feel like these are skewed just a little bit to the advanced users or the more proactively addressing AI things.
Yeah, this is like going to stand outside the Staples Center in California and asking people what their favorite basketball team is. And for being surprised that a lot of people say the Lakers, like they must be the number one team. Yeah, kind of the same thing. If you're going to Karbon and people are saying AI is the next big thing, you might have a little bit of polling bias.
Yeah, right.
Utility accruals, depreciation schedules, amortized expenses. No, these aren't just the suggested topics at an accountant's only speed dating mixer. These are also the reasons that accounting's hottest new app has changed my life. Presenting Accruer by FinOptimal. We accountants now have the power to post years, months, and fortnights worth of accrual entries in just seconds. The time savings alone on receiving perfectly crafted reconciliations to all my prepaid expense accounts and depreciation schedules is enough to make me name my next child Accruer. Luckily, I'm done having kids. If you want to join the party, head on over to finoptimal.com to see Accruer in action. They offer a 60-day money-back guarantee, and they don't even require a demo. Use the code Unaccountable to get 50% off your first 2 months and to prove to Tom at FinOptimal that more than my mom listens to this podcast. Now back to the show. Well, Jeremy, with that noise, it is now halftime, the part of the show where we go to the sidelines and get a little app snack. What? You look like you're going to interrupt me. I'm going to flow.
I am going to interrupt you. So as we've already stated, we're kind of piecing this one together. So we're talking about like, hey, what kind of app snack do you want to talk about? And you said VisiCalc. Am I the only one who hasn't heard of this? So then I spent just a minute to actually Google VisiCalc because I'd never heard of this. Am I the only one? And then I was
How
like,
did you not know this? This is the original spreadsheet. Like when people ask, what was the first Excel spreadsheet? I know Microsoft Excel came out in 1987. And yes, some of you remember that. It was on Apple before. I know. But Microsoft Excel was 1987. But in 1980, VisiCalc was the first electronic spreadsheet that changed the game. How do you not know this?
I had no idea. After this drops, I'm going to put a poll on Facebook and be like, how many of you knew VisiCalc before listening to our episode, or even if you didn't, how many of you knew this? I had no idea. So like I Googled it and I see this green screen of tables and I'm like, what is this? And then I realized it. So you're an ass. So I'm
Well, we were supposed to have a guest on. They had their own thing they want to talk about. We're not going to steal their thunder. So we are pivoting, and I looked at like what in my tech stack do we use that we have not talked about yet. And you know what we haven't touched on, Jeremy? An unsung hero in my tech stack?
What?
Guru.
Okay, yeah.
GetGuru.com. So for those of you that aren't aware, GetGuru is my brain. It's where we dump all the knowledge, good or bad, you know, how we do our certain processes, my company onboarding manual, lyrics to Alanis Morissette songs, and a whole bunch more all live there for my team readily to access when they need it. And the reason I love this platform, like we have so many smart friends that use much more powerful programs like Notion, or, you know, they use the notes section in ClickUp or all this other stuff. But I love it because it just feels like no matter what program I'm working in, Keeper, TaxDome, QuickBooks, like I can have my instructions pop up on screen because of how Guru operates. Have you looked into this at all?
Isn't it ironic? I have not. No, but yeah, I have not. I've heard of this one.
Bravo! Can we just hold on? That was so good.
No, I have not. So like we're on the Notion train, and mostly because of Alyssa Lang's team helping me get all these things in place. But I have heard they're good things, and I've done the requisite couple minutes of digging into it just to better understand it. But no, so I'd love to. So let's talk about that particularly, because that's cool. How does that work? How does that show up on your screen when you're looking to get Guru information on the screen in your other tools? Where does that come up? How does it integrate? Or talk me through that.
So ultimately, Guru, the power is in its browser extension, right? Like you've got Guru, everything, all your information lives on cards, and then you can tag the cards, right? And like, so here's our card on how we recognize revenue from this point of sale system. Here's our card on how we do this. And like a card is just a knowledge base. And then you can have that card live on boards. And so you can have a board for this client, a board for this client, and whatnot. And it's all like, it's a decent structure. You can have tags so that, every time, you use the Square point of sale, you can tag it with Square. So then if you ever search Square, it shows up. So like some cool search features. But the nice thing is their browser extension. If you have a link to a card on a page, like for me, Taxdome or Keeper or Financial Sense or Lisio, if you have your walkthrough, your SOP on a Guru card, and you have the browser extension installed, the moment you click on that, because you've put it in your task managers, how to do that task, it pops up on the screen you're on in a modal that you can move around. For those of you who don't know what a modal is, that's how developers say a little pop-up window that you can move around. Okay, that's modal. It pops up with a little modal that you can move around the screen. It has my walkthrough instructions. It shows the video I've embedded on that card of how to do it. And so my staff can actively, in another software, have the instructions pop up right there. And it doesn't matter what program they're in. It's the same experience the whole time. Then they can open that browser extension, search for our company handbook. They can search for, do we have anything listed about our 2FA process? And it pops up. They click on the one that shows up in that little sidebar, and that modal is on the screen while they're working on something else. And so it's just, honestly, like, Jeremy, I know you, Alyssa, and a lot of our friends use Notion. Notion is more powerful. Notion has more features. Notion, hands down, head to head, is a better platform. Guru, I would argue, fits my needs better than Notion ever could.
Yeah, and I think that's cool because it saves you a click and a search, right? Like if I go to Notion, I need to go there, and it's like, again, very powerful. I can type whatever I want in there, and it's going to search its whole database of all the things we built out and bring up all the results, which is cool. But I do need to go to a separate place and type it in there and whatnot. The extension just saves me 3 seconds every time. But if 3 seconds for 20 tasks a day, 365 days a year, because you and I don't take days off, that time adds up, right? So that's pretty cool. I like that.
We do actually take Boxing Day off, so 364. Yes. But no, beyond that. And so honestly, like, if you're looking for a place to store your knowledge, to be able to share with teams, there's even like some cool things like where you create a new card, you can make it an announcement, and you can actually track which staff have looked at that card and, acknowledge that they've read it. So like key company updates about upcoming holidays or new policy changes, or our IT team has locked certain people out because they keep Googling Beanie Baby fan fiction. Like, there's a whole bunch of cool things you can do. It's a fun software if you're looking for something that you've already figured out your task management, your workflows, everything else, and you just need to store your knowledge somewhere. And the reason I like it the most is that it's not my task management system. So if I ever want to leave my task management, leave my GL platform, leave anything, it's still there. I can take it with me wherever I go.
Yeah, no, I agree. And cost, I just looked this up while we were talking about it. So $15 per user per month, not terrible, right? Like if you start growing bigger teams, that gets a little bit, that's their like main platform. And then if you're doing enterprise, I'm sure you can get cheaper per person, but if you have that many people, so not a crazy cost either to have that resource at your fingertips at all the time.
All right, well, that was awesome. My day's made. Now, on to the next. We have another game for you, Jeremy. And this is because I know you just feel left out when we all talk taxes and don't just focus it towards you. I know, deep down, you always tell me about how you wish we would ask you more tax questions than we already do. So today, we're going to put you back on the hot seat for a game I like to call Extra Credit, where we're going to go over some tax credits that business owners and average Joes like you and I can take advantage of and see how well you know and maybe educate a listener or two. How do you feel?
See, I hate it and I love it because I do learn things, right? Because like I am a for-profit business and don't know taxes all that well, but I also hate it because I'm so sick of tax stuff and I have no passion there. So I'm ready. Let's do it.
All right, well, let's get into it and abuse you. Jeremy, question 1. Jeremy's new business, Jeremy's Berries, can receive up to $5,000 in tax credits for providing his staff what new benefit? Is it a bonus structure? Is it paid time off? Is it a 401k? Or is it remote work options?
I think 401k.
Well done. I mean, maybe you still should give your staff the other stuff like paid time off. But yes, by implementing a 401k or any one of the qualifying retirement plans, you are eligible for the small employer pension plan tax credit, which there's lots of criteria. I'm not covering it all here. Make sure you refer to all the rules and regulations. But if you're under 100 employees, you can qualify this, and you get even better credits if you're under 50 employees. Now, it's not refundable, but within the first year, this is $5,000, and over the first 3 years, it's up to $15,000 in tax credits, which, as a reminder for those that don't know, that don't love taxes or mom, hey, just reminding you, a deduction on your taxes means you reduce your taxable income. So if you have a $10,000 deduction, you made $100,000, you now owe taxes on $90,000 worth of income. So let's say you had a 10% tax rate, that's $9,000 in taxes. So that deduction saved you, $1,000. A tax credit is dollar for dollar reducing your tax liability. So if your taxes owed was $10,000 and you got a $10,000 credit, you wiped out everything. So credits are awesome. Just a reminder. And Jeremy, I happen to know that someone set up Guideline in the last few years for his business. Are you taking advantage of it this year?
I don't know. I'm gonna have to connect with my tax person. So you said you get this credit in the first 3 years, correct?
For the first 5 years, actually. The first 2 years, you get it at 100%, and then 75, 50, 25 for the next 3. But it's limited to $15,000 in credit in the first 3 years, $5,000 a year. But it's essentially you can get money back for creating this plan. I've already done my taxes for the year. This was a pretty sweet credit to get back.
Oh yeah, I think so too. Yeah, I think we started ours in 23, so I would be in year 2 of it.
Yep.
And might be reviewing my 2023 return to see if there was something missing there.
Yep. You might be able to go back and amend, or I think even some of these credits where I'm not going to speak out of turn with everything in front of me, but there's some of them you can actually retroactively go back and claim. So, hey, good day for Jeremy.
Yeah.
On top of that, under the small employer pension plan credit we just discussed, if you are employing a military spouse, the employer can receive a credit up to how much per employee? Is it $300, $500, or $700?
I'm gonna go with middle 500.
Good instincts. Yes. So if you employ the spouse of an active military person, active military, I don't know what the noun is there.
Pronouns are out now apparently. So.
Okay. Well, if you employ the spouse of active military, you can get up to $500. You get $200 just for having the employee on the plan, and then up to $300 in reimbursement for contributions you made, up to $500. And this is just $500 for every active military. I didn't even think about this. And then when I was doing my taxes, it was like, holy smokes, I do have one employee whose husband is active military. I should start hiring just active military people. This is awesome.
Do you know accounting? No. Are you a member of the armed forces? Yes. You're hired. I love it. But is this credit is just for their spouse? Do you get it for the individual who might be active military as well?
Well, it's only the one you're paying. So you have to have the employee on the pension plan. So obviously they're not active military if they're working for you. So it's only the spouse. But if you have them on your pension plan, your 401k, your simple, $200 just for having them on there, and then up to $300 in reimbursement for contributions you matched.
So active military can't have side gigs? Or what? What are we saying here?
I don't know the rules here. Jeremy, why do you ask questions we don't have the budget to research?
I don't know.
Question 3, Jeremy. Already 2 for 2. Like, you're sitting pretty today.
Nice.
All right, so question 3. When Jeremy decides to go back to school to learn how to manage a team, he may be eligible to receive up to how much in tax credits under the lifelong learner credit? Is it 2K, 4K, 6K, or 8K?
I do not. I thought you were going to go with a different way with this. So I'm going to go 4K.
I am sorry. The answer is $2,000. Now, there's actually 2 credits that you can receive, the American Opportunity Tax Credit and the lifelong learner credit. I'm talking about the lifelong learning because this one can apply to anyone that's already gone through school. There's no limitations on like you have to be working towards a degree or not. But if you receive a 1098T from the institution you go to, so you can't just sign up for some bookkeeper course from a shady accounting podcast, you actually have to go to an institution. Those expenses are eligible, and you can get up to 20% back on the first $10,000. So 20% of 10 grand, 2K, there's your max. But, there's things like this phases out, between 80 and 90K for single filers or 160 to 180K for married filers. But still, like a cool one, if you're going back and maybe wanting to get your CPA and need to finish a few classes or anything else, you can get a tax break for going back to school and doing the stuff. Kind of neat.
Is your current program where you're getting your CPA classes through accredited, Tyler?
Sure is.
All right, perfect.
Darn tootin'. You asked me about it last week, the 1098T. You want to know why I had that answer ready? Because I had one sitting on my desk when you asked that question.
American Samoa College for Accountants.
It's less reputable than that. All right. Question 4, Jeremy. The Work Opportunity Tax Credit provides 40% of up to $6,000 in wages paid to qualifying employees. So you get a tax credit up to 40% of the first 6K. This includes any employee of the following, with the exception of which one? Do qualified veterans not apply? People on supplemental nutrition assistance programs, SNAP, summer youth employees, or untalented podcasters?
I got to make sure I know the negative of this.
Who doesn't qualify?
I'm gonna have to go with I was gonna go with the SNAP one. I thought you made it up until you said the acronym. I'm gonna go with the podcasters.
Absolutely. Make it, Jeremy, I didn't know how well you do, and I wanted one question that at least would guarantee you didn't get a shutout. So here I am for you. So this is if you employ, there's like 15 different types of employees. I would go look at the list. Don't trust me on here. But if you employ one of these groups of individuals, you can get up to 40% of their first 6,000 in wages in tax credits, which is kind of cool, like qualified veterans. Jeremy, if you want to, your military spouse all of a sudden is no longer a military spouse because now they're a veteran, hire the veteran and now you can get this credit. SNAP recipients, it's, incentivizing to help hire people that might need a little more income in their life. And what I thought was interesting was summer youth employees qualify. Now, this is a super small window for summer youth employees because they have to be within 16 and 18 years old on the date of hire or before May 1st of that year. It's only between May and September. So you're really incentivized to give high school age kids a job for the summer and take a tax credit for it.
Nice. And I was going to go with that one until your last shenanigan one. I was going to go with the first one, I was like, no. And the second one, I'm like, ooh, yeah. Then you said an acronym. I'm like, no. And then I was like, youth one, no way. All right. It was a roller coaster.
That's what I'm here for, man. But anyways, cool. Easy way if you're trying to decide how to help out. And especially if you're a business owner, you're looking for tax credits. The government's trying to incentivize you to hire these people. It's not bad strategy to hire people. They're giving you tax incentives to hire. So cool stuff there. 2 more questions for you, Jeremy.
Yeah.
Jeremy is on the quest to get off the grid. He no longer wants to rely on his governmental resources. So Jeremy installs solar panels on his home. Ooh. How much of the cost of his solar panels can he receive a tax credit for? Is it 10%, 30%, 50%, or 70%?
Oh, I want to phone a friend on this one. 50%.
I'm sorry. The correct answer is 30% of the cost of solar panels, or it could be other alternatives like wind powered. There's a list of what qualifies for the green energy tax credits. But whatever you do, no cap. No cap on the amount, not how the new kids talk these days. There is no cap on that 30% of installation. So if you had 20 grand and 21 grand in installation costs for solar panels, you're getting a 7K tax credit this year to offset that, which that's a pretty good deduction on an investment that might pay off in the next couple of years with rising electrical costs.
No cap. Yeah. I'm right there with you.
Well done. Last question for you, Jeremy. The child tax credit is a moneymaker for us here in Utah with our 14 kids. Mm-hmm. How much of the $2,000 child tax credit is refundable? Which, a reminder for those of you playing along at home, tax credits reduce your taxes up until you hit 0, and then you can only get the money back if it's refundable. Non-refundable credits, you can't go below 0 and get money back. What portion of it is refundable? $1,500, $1,700, or $2,000?
Go with the full 2,000.
You see, you don't have enough kids. You're not thinking about this, Jeremy.
Yeah.
No, the right amount is $1,700 of that $2,000 is refundable tax credit, which, hey, cool. But it just kills me, Jeremy. I feel like there should be a bigger tax credit for kids, man. Like, At what point, like, is $2,000 even close to like saying, "Hey, we understand your burden"? I feel like it should be more. Disagree?
I do not disagree, but I also say that I have plenty of children, right? My two, that's perfect. Don't need more of that in my life, both cost wise, love wise, or aggravation.
I was actually doing some Google because I wanted to, curate this question differently. Apparently, the Guinness record for in the U.S. for the most kids that go boy girl, because that's the only record they documented, was 11 kids. But then there are shows on like TLC and other stuff of families with 19 kids plus one adopted, so 20. So you're getting a 40K tax credit every year if all of those kids are under 18. Well, and then if it's refundable, it's a little less. But holy smokes, I can't even imagine.
I can't either, and you're not going to come out ahead unless you're feeding them ramen and they have zero extracurricular activities.
Unless you put them all to work and then
Ooh.
pay them through the business, get it all out tax free, and then have them pay for all the utilities, mortgage, and everything else. Life hack: have more kids, people.
Ugh, yeah. Nope, not doing it. Love it.
3 for 6, Jeremy. I'm proud of you. You are mediocre as always.
Perfect. All right, well, let's move on to our next game that I labeled with a little bit of Midwest love, Shady-er-no. So, I don't know if
Not
you saw this.
Shady-er-no, Shady-er-no.
Shady-er-no. So that's it's a love language that we have here in the Midwest. So I don't know if you saw this, but Meta this week, which we know is the parent company for Facebook, released that they made a small change, quote small change, that is going to save them a ridiculous amount of money. So they said that they are changing the useful life on some of their servers and network assets from 5.5 to 5.5 years that were previously 4 to 5 years. So extending the useful life of these assets.
Okay.
Do you care to venture a guess on how much they are estimating that is going to save them in 2025?
So I guess here's the question.
Yeah.
Because normally you want to speed up depreciation to take it now, time value of money, get cash back. Yeah. You've made it sound like they're going from 4 years to 5.5. So they're extending the depreciation. I don't know. You'd bring it up only if it was an absurd amount of money. Yeah. Let's say $1 billion.
$2.9 billion of less expenses they are going to have in 2025 for adding a half, like 6 months to a year and a half to their fixed useful life of these fixed assets.
How does this work?
So like, if you think about it, right, they buy them, right, and it doesn't go to the income statement, right, it goes as a fixed asset.
Yeah.
And now instead of taking, let's say you have $1,000 server and now it's 10 years because I'm bad with math, you're doing $100 a year and you move it to 15, then you're doing much less expensing of that, right? So it's
but doesn't that mean more income?
Yeah, that means there is going to be more taxable income. Well, this in a vacuum would be more taxable income. But you know how much money they have? They're just going to find another way to get all the tax credits and everything else.
Okay, so they must have some other strategy. So you were saying this isn't going to reduce their tax liability. This is going to reduce their expenses listed every year.
Correct. This is going to reduce their expenses every year because their depreciation is going to go down by $2.9 billion next year for extending the useful life.
Okay, I thought we were talking their tax bills going down. That makes sense. Okay, please proceed.
Can you, for one time in this episode, get off of tax and think about accounting? It's an accounting.
Nope. Oh, man. That's where I live right now.
Okay, so my first question, which you kind of talked about, right? Like, how would this impact their financial performance, right? They're going to have more taxable income because less expense.
Yep.
Next question, how would this impact their cash flow?
It shouldn't impact cash flow at all as long as you're paying it all up front. This is accrual fund money.
Yeah, 100%, right? Like, this is all non-cash transactions you're spending, and they said they're continue to spend similar capital expenses in new servers and things each year. It's just they're putting them longer on the books.
So they're saying they're going to hold on to our sensitive data longer on those servers because they're useful life. Okay, so interesting. They want to hold it into the next administration. I don't know why. Okay, go on.
Yeah. So the question is like, I was an accountant at a Fortune 500 company, and these are the things that people seem to do. Be like, if they need more or less income, let's look at this accounting policy or this useful life or whatever it is to change the financials to benefit us one way or the other.
Yes.
Whether like this one, do you think their stockholders are going to see that much less expenses? Fantastic. Hopefully they have another tax strategy like you talked about, that they don't have that much additional taxable income.
Yeah, I mean, it's gonna, change earnings reports and a lot of things where they're gonna look more favorable. I don't know if it drives the stock price now and then gets more cash investment in. Oh, the strategies of the wealthy.
Did I ever tell you I bought Facebook on their IPO?
What? No.
Yeah. Oh yeah. Not a lot because I didn't have any money then, but I'm like, I like them. That has paid off well. Anyway, we're gonna get away from that.
Congrats, sir.
Yeah, thanks.
I bought Beanie Babies back in the 2000s.
Yeah, right. But my question is, and I have a couple more examples of this, when people do things, we'll take Facebook's one or Meta's for the first example. Is that shady or no?
I mean, I'm going to go no, because you disclose it, you put it out there, you're allowed to play those games. It's not going to change too much on the taxes because you still got to go by publication 946. So this is just their reporting for managerial accounting. I mean, it's the games you get to play. And if the useful life of them is longer because the hardware is better, they last longer, it is justifiable. So I'm going to go or no.
Then the shady or no's don't have a right answer, right? I just want to discuss, like, theoretically, is this shady or no, right? There's no right answer. Yeah. I would argue, like, you can say, hey, this is getting made better and it's going to last longer. But also, I forgot what the rollover is of technological advances. It's like every 6 months or 8 months, the doubles of size. And
you're talking about our conversation with Dane. So it used to be 2 years. Now it's about 18 months. Every 18 months, computing power doubles.
Right. So again, I don't feel like those are lives are going to get extended. You're going to want the newer, greater, better thing. But what do I know? So a couple other examples of where public companies have made these accounting changes and talk through how it impacted them, and then shady or no. So number 2, Microsoft in 1999 to 2000, they switched to a more conservative revenue recognition policy, deferring revenue from software sales over an estimated life of the product versus recognizing it upfront.
That makes sense.
Okay, so first of all, how did this impact their financial performance?
Well, it definitely reduced the amount of income in the current year and spread it out over the future, making less taxable income right now.
Correct.
So if they're selling one-offs, like I look at this like back when I was in the ski industry, people buy a season pass. We want to recognize it over the entire season they're going to use it, not just in the month they bought it, cash basis. We want to accrue that. If you're selling a software and it's, a one-time upfront cost, I would absolutely want to spread that out.
Right, because of first of all, consistency of revenue and to spread out your taxable revenue, right? Like you don't want to take, if you have a big month, like, hey, it's January 1st, come get your new software. You don't want to take this huge tax hit in January. You want to spread that out, or even if you get it multiple years, right? If you're doing a 3-year subscription to Office, et cetera, right?
Yep.
So,
well, and again, matching principle, if you have all these expenses after the sale that correspond to supporting that product and the follow-up and upkeep, then you need to match the revenue with the expense. So I'm going to go with no.
Yeah, I'm going to agree. I'm going to go no there. That is not shady. And impact of this one, it was $500 million that got deferred over multiple quarters when they made this change. So I'm going to agree with that one. That one seems to make sense, right? Like you want to have this over the life. So second example, we're going to flip the coin here. So an Apple in 2010 moved from subscription accounting to upfront revenue recognition for iPhone sales. Yeah. So now talk me through how that would impact.
So they want to recognize all the revenue right now when the money came in. And obviously that's going to put a big bump right now. But if you're looking for a high valuation in the market, you definitely want to show you're super profitable right now, would be my guess.
Right. I would agree. And, everyone is really concerned about Apple's valuation and free cash and all the things that if you were Apple, right? But yeah, you're 100% correct. So this change increased their reported revenue by over $5 billion in 2010 and boosted quarterly earnings. So as a result, stock price surged stronger financials, all of those things.
Yeah.
This one, I don't know. I feel like, is this Erno or Shady? Maybe a little, but I also think like the question I had on this one is now when you buy it, right, you can get it for like 0% interest and put it on your monthly plans through your T-Mobiles or your Verizons or whatever over 3 years or whatever that period is.
Yep.
Right. But I feel like that has accounting implications for the carrier that's selling you the phone, not Apple, who is selling the phone to the carrier, probably at a discount, bulk rate, whatever. And I feel like this better aligns with their financials too, that they should recognize the revenue of this hardware product right when they sell it.
Because I think the big distinction here is hardware versus software. Because you said Microsoft products, software, continued support. While the phones do have a software component, so you could say, Tyler, you're lying. Also, I'm wondering if I'm shady because I'm finding a way to say no to all of these. But I mean, I look at it like they did a whole bunch of R&D work to develop, manufacture, and produce these. And I would imagine you would then want to offset that expense that you've been putting on the balance sheet to develop and produce these phones and recognize that revenue up front instead of having to also spread out the expense of developing them over a long period. So I kind of get it because it's a manufacturing exercise. But again, maybe I'm shady because I can just always find a way to say no.
Well, I mean, and I think that's maybe a theme here is like, as a skilled accountant, if you can make a reasonable case for this change in accounting methods, that's fine. But it's also, I also feel like there's a game there, right? It's the game we play to make sure we meet quarterly numbers as a public company if you're ever there, right? So I agree. I think this one makes more sense as well. All right, one more example. So Uber in 2019 changed how it's recognized its revenue for its Uber Eats business. It changed the revenue recognition to the net revenue that it got on that revenue. It got on the sales. So just going to leave it at that and let you, I see you're stewing through the mind already. How would this impact their financial statement?
Okay, first of all, I'm really concerned, Jeremy, because all these questions sound like you did a research. Like you put an effort into this game. And I'm wondering, like, who are you? Because, like, these are good questions.
I just realized how much of this episode was going to be based on tax, and I had to pull it a different way. So I put forth the more effort than typical.
Okay, so my guess the game is here, as you were saying before, they would recognize the gross revenue. You know, someone bought an Uber Eats thing for $50, and then Uber would say, well, hey, we collected $50, but 35 goes to the restaurant, we keep 15. And normal accounting would say $50 in revenue, and then 35 in expense to the restaurant, and then 15 in profit for them. And they went to just saying, hey, we have 15 in revenue now, nothing else, because that was the restaurant's portion, which tells me they're playing a sales tax game here because there's probably an implication that you owe it on the top line collected and they only wanted to remit on their portion. But really, aren't they just pushing the sales tax liability to the restaurant, which I guess makes sense because then they don't have to worry about pass-through sales tax. But I'm guessing that was the reason, is they wanted to still report the same amount of profit, but they wanted to reduce the amount they reported in sales taxable income.
Okay, I didn't even think about the sales tax angle. Is like if you do an Uber, is it taxable? Yes, right? You get a tax.
Yes.
Okay, I thought so.
You're buying food.
Yeah, and say you're buying food. So yeah, I think you're right with that analysis. If you want to ding yourself, go nuts, because I know how much you love to ding yourself.
Add my finger on the button.
Even when you're wrong, yeah. But then think, like, generally on their financial statements, you assess this right too, is that they are both lowering their gross revenue and their gross expenses.
Which makes margins look so much better. Yeah.
Okay, all right, I'll give you that one. I had to think through that a second. But more or less that, yeah, instead of showing both of these, right? And I would think like this is almost, if you would say you would do sales with a fee, right? Like you're doing a Shopify thing, right? And I'm only going to post the $80 that I net out of the transaction versus the $100 in the fee, right? Yeah. Which again, doesn't impact your bottom line, all right? But this was done as part of their IPO, and it ended up lowering their reported revenue by $6 billion annually because they moved to this net revenue model versus the gross revenue model, but really had no impact on their profitability. It just made them appear smaller from a top line perspective.
Did it like lower their valuation and make it so that it was cheaper for certain individuals to buy that stock when it came out, knowing it was going to go higher?
You wonder. Yeah, I didn't even go down that path, but didn't answer the question. Shady or no?
I mean, if it's for sales tax reasons, the state's still going to get its same amount because either Uber had to collect the full amount and remit to the state, or they remit their portion. Or maybe not, because they're a delivery service, so they actually wouldn't owe on their portion. It actually reduces the cost. So actually, I like it if it's a sales tax reason. If it was to adjust the stock price to make it less valuable so that then they could buy in on their own stock personally at a lower rate, knowing that not everyone knows this game, I say shady.
Yeah, I agree with that assessment too. Again, we talked about if you can make a valid argument that this makes sense, and I think in this one it does, right? Like, you know, that you're not getting that full revenue for it. You're passing so much of it through. I would want, if I'm managing an Uber in this situation, I would want to see net. I don't care how much you're giving me total. I want to see the expense of the food. How much are we making on this transaction? Because we are in the business of delivering it, not of buying food and passing it through, right?
100%.
So yeah, I think this is a good one too.
Wow. Look at us, dude. That was intelligence from you. I'm impressed.
I know, right? New leaf getting turned over today.
All right.
All right. That takes us to our winner of the week. And winner of the week this week, aspiring accountants. So did you see the article now where the A.I.CPA and NASBA are both now officially putting forth suggestions to changing the requirements on becoming a CPA?
Yes, so I've seen this. Yeah. And Blake Oliver has just been like everywhere touting like, look, Ohio's leading the charge and other states are jumping on board. But yeah, talk us through what this means for everyone.
I love that you brought up Ohio. I'm going to get back to that one in a second. But if I'm not mistaken, it was 150 credits, right? Which is typically over 4 years of college, or 5 years, plus 1 year of experience. They're now proposing that you can do just a bachelor degree, which is normally 4 years, plus 2 years of experience, right? So that you don't need to foot out additional money and time to getting education in order to sit for the CPA. It does say it's based on state lines, right? And that they're giving suggestions to this. I don't know if you saw this article. There was one from the Going Concern that said, later losers, Ohio already makes change for CPA credentials, which I feel like that's fantastic for Ohio because it gets a lot of crap. So he's going to be like, you guys are going to put me as the dumping ground state. We're going to do whatever the hell we want. We're going forward with this.
No, I love this. And honestly, can I tell you selfishly, I'm very happy that the rule is now either or. Because as someone who just put all the time and money to finish those last classes and already have my 1 year signed off, but do not have 2, I was terrified they're going to say, now the rule is 4 plus 2. And I just wasted all that money to get the extra to finish my 150 hours. And now I need to have someone come in at my firm, review me for another year. I was terrified. So I'm happy the recommendation is now to provide either or.
Yeah, that would have sucked. Oof.
Yep. That would have been my luck. And for the loser of the week?
Loser of the week. When you think Kentucky, Tyler, what do you think of?
Bourbon.
Bourbon. Thank you. That's exactly. I thought you were going to go a different way there, but bourbon. Number 2, Kentucky Fried Chicken. Probably, right? The Colonel?
I was going to go Derby, but, you know, the Colonel would have made it there soon.
Derby, mint juleps, maybe Louisville Bats. I don't know. Anyway, Kentucky Fried Chicken. Sorry, Kentuckians. Kentuckionians? I don't know what the right name is.
Kentuckites?
Kentuckites. I like that. They're moving the KFC corporate headquarters to Texas out of Kentucky. How can you do that? Oh, the pain.
Are they going to rebrand? Are people going to have a petition now to be, Texas Fried Chicken? They're going to try and steal it?
Doesn't roll off the tongue. And then instead of having the Colonel, they're going to have like a Yosemite Sam there, and you do. I don't know.
Feels about right.
Yeah. So, you're Kentucky. Feeling sad today. Sorry to hear it.
Jeremy, another fantastic episode. I mean, we got a guest lined up for next week. Exciting stuff going on. Dude, we're surviving. We're getting through February. Soon enough, it's going to be March, and then we'll be partying in Florida at some sort of conference. Or, maybe you come with me to San Diego. We'll figure it out.
San Diego in March sounds fantastic.
Oh, we're going in May. But yes, absolutely, man. All right. Well, until next time, sir, you have a good one, and happy tax season.
You as well.
Hey team, this message is for our bookkeeping buddies out there. And I know when my firm offered only bookkeeping, it was super hard to find a tax preparer to partner with. Well, if that's you, look no further. Me and my team at Specialized Accounting are looking for bookkeepers to partner with. We will do the tax planning and preparation for your clients, and you keep doing the bookkeeping. No longer have fears of working with a tax preparer that doesn't know what they're doing, or live in fear of them stealing your clients. Me and my team, we want to continue to grow, and I want to continue to grow Unaccountable without growing the name that we steal clients. So we would love to partner with you. If you're interested in working with our team to do the taxes for your clients, reach out to hello@specialized.at.com. That's Specialized Accounting and Tax, specialized.at.com. See you soon.